Hello and welcome everyone. This is John reporting for the Bottom Line Commodity Report. First off, I want to go through a couple things from last week. The chart in front of us is the NASDAQ 100. It's hard to see. I'll take the pivots off, but we did form, after all of last week's price action, a doji. In fact, the prior week we closed at 26.12. This week we closed at 26.10 change. So we actually were negative on the week. Not a lot happened, as you can see, with the advanced decline on the NASDAQ 100 on a daily chart. Let's take a look at our weekly chart, excuse me. Now let's look at the daily chart. The little uptrend that we started since the beginning of June, this little uptrend here, we've seen the advanced decline, stocks breaking out. But unfortunately, as you can see, we've when we penetrated that old high, and we'll just line it up exactly, we just broke down below that trend line and that horizontal old resistance level that held so nicely for, say, all of last week. The volume, though, the sell-off that we've seen was not on, and it was only one-day sell-off, so we didn't see a lot of volume associated with that. But the fact is that on this price increase that we've had in the last few days, it did not accompanied by a lot of stocks. In fact, some of the stocks actually saw profit taking. So to me, that's kind of gives us a more of a neutral outlook. Now, this day right here was the 4th. Many people recognize the fact that the 4th, the markets were closed, except for futures were open for a few hours in the Globex session until 10:30 Central Time Wednesday. So we formed that doji, but we can't really count that doji, so we got to take that out of the picture. But look what we had on Thursday. Thursday was actually pretty much a doji formation, and we closed below the low of Thursday. And if you notice here, what is the low here? The low is 26.13. So if we take the 3rd, which is Tuesday, and there was some decent trade action on Tuesday, the low was 26.13.5. Let's go back here. We closed below these lows. So we did not generate a system sell signal as of yet. However, I think we should see some more follow-through weakness this week. My first guess is that the market comes back and tests that level area of support, the midpoint of that breakout candle, on any daily close below this level. I'm going to call it 25.23. It's like that open, the average of these two lows, that low, that low. If we close on a daily basis below there and we see a further weakening as indicated by the on-balance volume indicator, then I got to say we've got some issues coming on into the marketplace, and we should probably see a challenge of that low at the very minimum. So I'm going to leave those two levels up on the chart, and we'll revisit that in the next couple days. All right, a quick look at the Dow. We did break on the AD line. The 30 stocks that this AD line is comprised of did break down of its trend line. We did see a daily sell signal generated in the Dow. Dividend yielding stocks has been the most defensive play, and it seems to be all of last week the one sector that had the most, the most. It was the weakest link of all the sectors indexes that we look at. Okay, S&Ps. Looking at the S&Ps again, same story with that doji, which was the July 4th holiday, which was off, but we did generate a daily sell signal on the E-mini S&Ps. Did not break down on the AD line, but we did see a little bit of sell-off accompanied by decent volume. As you see, we broke that trend line. Let's take a look real quick on a weekly perspective. Weekly perspective, look at the long shadow, and it closed below the open, and we did close the S&Ps lower on the week. So when I take a look at that, I say, gee, it's not a lot of confidence of all the news that happened and the liquidity that was added to the marketplace with the European banks trying to bail out Spain. So this little rally that we've seen, I think, might have been more on some short covering rather than new buying. I'm a little concerned the fact that we saw newer highs on a weekly basis. And let me show you what I'm talking about. So from the highs that were made on June 15th, we've obviously seen higher highs, but it's not been on higher volume, so it's not a breakout of volume on a weekly basis. So the more I look at the different sectors and the more I look at the different indicators with the volume and the price action and the AD lines, the more I believe that next week we will see a neutral to bearish week, which means if we see any early in the week, if we get any weakness, we'll probably see a pop to the upside. And if we see any overhead strength, it's going to be met with some selling. So two-sided. So in that environment, I'd rather be a seller, especially if we come and test this high up here, which is around the 1370 to 1375 area. That's what I'm looking to do for next week. Now, in the cash market, those were the futures. Looking at the NASDAQ Composite Index, formed a bona fide doji, and what's really, if you were bullish, I'd be very concerned for the fact that the market broke out, took out the last 6 weeks' highs, but not so much with the advanced decline. On balance, volume showed a nice little breakout, but we didn't really see a lot of strength to the upside. So when we look at a daily chart, we broke down a little bit, and there's some profit taking. But overall, this is the one sector that's remained the strongest. So this is the strongest link in the chain, is the tech and the NASDAQ Composite Index. And now let's take a look at the small cap as represented by the Russell 2000. We formed a bona fide low close doji on a daily chart. Generally, that'll give us a sell signal before any of my systems do. We always teach our students that at Trading Traders University. Low close doji, high close dojis come first. Then you get a system generated sell signal. So we need to respect the fact that the small cap, which had such a spectacular move in the last week and a half, did run out of steam, formed a low close doji, and it was on significant volume. The advanced decline did not break down below its old resistance or old high level, and so I believe that this is the same scenario. If we get back down into the 786 area, this old high, if we hold there, all we're going to do is see a little early weakness, and then maybe one more resumed uptrend towards about the second week of July. And after that, that puts us into earnings season. And guess what? I think we're probably going to be hit with some bad news, some corporate negative news, poor guidance, etc., etc., and that might get us into the seasonal downdraft. The tech sector, typically internet stocks, take a look at some of this that we'll talk about in planning and scanning Monday morning in the trading room. Typically, we see the technology sector has had strength. Your Akamai Technology, eBay, in that space, we've seen some strength in the market, and then by about the middle of July, that sector peters out and then heads lower. So I don't know if the semiconductors, if they're buying, even Dell saw some strength. So computers, computer hardware, software, those companies do well until about the middle of July, and then it's over until about late September, early October. Typically, my theory, and obviously what we might be seeing is the manufacturers are buying up inventories to start to build products to sell to kids going back to schools. So getting ready for the fall selling season. So it's not just that we get a big barrage of retail sales at Christmas. There are certain times of the year that we also see certain sectors do well. Kids buy new computers nowadays going back to school, whether it's now it just seems that they get younger and more advanced. So 2-year-olds are not 2-year-olds, I'm joking. But I mean, you got kids that are going to kindergarten learning how to use Apple computers and interfacing with computers overall. So our society is based on technology, and so we got to respect that seasonality in that sector. So we look for markets that are overbought and look for those sectors that have the chance to, those who rally the hardest in a seasonally weak period of time stand the chance to fall the furthest. So that's what I guess I'm saying. So we'll be watching that sector in the small cap area and look for signs of further continued weakness. All right, on Friday, I thought if we could take a profit, it would be pretty decent to get out, and I might have missed that opportunity to take that 70 cents real quick, and I don't think we got filled, and I'm pretty sure we did not get filled. We're still in from negative 670, closed at negative 700, so that would be a 30-cent loss, $120 worth of heat on the trade. I'm still in this trade, still like the trade. I think that overall we're going to see as this spread just completely collapsed. I think a lot of it was weather. concerns. And also the October contract that we're in, it seems turned victim of arbitrage-related selling. In other words, the hog contract, there was selling. People that were long October hogs wanted to spread for the weekend. What did they do? Well, instead of selling these hogs, they sold October cattle. So if we're long October and people come in and sell Oct cattle against it, it's going to weaken the prices. So that's why the spread kind of widened or narrowed more and went more negative on us on Friday, more than it should. Probably weekend-related selling, that's it. So we'll see how the spread reacts. Are still looking to get out of this thing at around 6, and you still probably have orders working there, and I'll keep you abreast of the market. All right, if the stock market is so strong, then why are bonds so strong? You can't. I don't think we're going to run into an environment where they're both going to run into strength. So a little concerned about the strength of bonds, but they can't break out of this range. If you notice here, we did a little class on Friday in the trading room and said, listen, we need to see a price breakout, a price magnitude. If we saw prices break out, let's say above this last high, you know, somewhere in the 150.12 and a half, 150.12 to 150 and a half, 30 seconds. On a large price move, and we stayed above there, I'd be a little concerned that we're going to go back up, not only take out that high, but possibly get even into the 140.54 region. When I take a look at the technical picture, you know, the big move that we saw in the bonds, there was an uptick in volume, but nothing very significant. This sideways action, you know, just shows that no one's really buying the bond market with any gusto or attitude, so to speak. And when we take a look at the 10-year notes, though, 10-year notes broke out. So the 10-year note, the mid-yield curve, the midpoint of the yield curve, the 10-year notes did see a nice little breakout. And if you look at the on-balance volume, they did so with a little gusto. So they're buying the mid part of the yield curve. They're buying the 10 years. That was a confirmed breakout. You get another daily close above these highs where this gray shaded area is. If you get two closes above that high, you know, even if it pulls back a little bit, but you get two closes above this shaded boxed area above that high, I got news for you, man. The notes they're gonna see some bid in there, and that would be kind of a clue that the stock market might see more weakness. So again, with the stock market, I said I think we're bearish to neutral for this coming week. So if we make early week lows, we'll probably see some support coming off, but I'd rather be a seller on rallies in the stock market if we get up near 1370 in the S&Ps. I'm holding to that outlook. The notes confirm, or at least to me, they raise the red flag that we should be a little bit cautious on stocks. All right, and then for the pound, you know, we were looking at buying the pound. We got a little issue with execution. Wanted to get out, and then the market rallied, and it's all the way back down. I'm thinking the pound just might see a re-challenge, a retest down here at 154. And I'll look for, as you can see, we typically might see a little bit of a pullback going into, well, this week, the 9th, and then we should resume an uptrend. So I'm looking to be a buyer if we see any further weakness in the pound, and I'll send an email alert out to that effect. If I tell you to buy it and place orders, it might not get there. We've got the night session. Let's wait to see how things respond after the weekend. And real quick, talk about gold. Gold typically has a little bit of a bottom towards about the third of the month, rallies, and then breaks back down going into the end or the third week of July. I'm hoping, and if you're long already, we're talking about that seasonality of the marketplace, and in the newsletter, I'm hoping to see the market break these lows. I would love to see, to be truthful, I would love to see the market break below this final low back down in here and get somewhere under this level to be a buyer. I think if it's a third week and the seasonalities come through, that I would love to be a major buyer in the market. If you take a look at just an overall trend, I'm not sure that we're going to develop that type of a channel event, because that would be, I mean, significantly that's back down to 1283. I don't think we formed that type of trend. I think we more form like this kind of a trend. We hit stops underneath that market, and we get into the 1460 to 1480. If you take from 1583 5% off of that number, you will get into that level. So 5% correction, then I'm looking to be a buyer, and if it's into the second to third week of July. So I'm sticking my guns on that analysis. Take a quick look at crude oil. Big rally, big failure. Obviously, a lot of resistance at, as we know, at around 89, let's call it, and a lot of support comes in at around that 77 handle. I'm still want to be a buyer down in here. It might not get there. But I can say this, if we take a look at the on-balance volume, it certainly suggests we could get down in there. We take a look at seasonalities, and we should fall down going into the end of July before a little upsurge going into the last part of August as hurricane season winds up. So I'm still on track to be a buyer there. Obviously, it's from a week-to-week perspective, we closed lower on the week, just a lot of volatility. We're right back to where we were in the average closing prices for the week for the last 1, 2, 3, 4, 5, 6 weeks. So nothing really there. That leaves us with the, we talked about the meats, we talked about the metals, we talked about the equities. My favorite now is to talk about the grains. We are in a weather market. Things look awful bad out there. The heat subsided. It was record temperatures here in Chicago, the Midwest, record temperatures around the country, no rain in sight. So just because it's cool, we kind of need to see some rain. And it is still just the first week of July. God knows what we're going to see coming into the end of July and into early August. So we need precipitation. It needs rains. They say the crops would need about an inch of rain once a week to see really good root system, once a week to really get those things back. But I think a lot of the corn crop, what USDA thinks is going to come out of the ground and what reality is, are two different worlds. We've seen a significant drop in potential of yield, and we're going to need to plant a whole lot of acres next year in order to get that crop back up. So I'm still very because of this weather situation, longer-term bullish on the grain complex. The only thing I would have done is, and I'm looking to do on a signal, is if soybeans generated a sell signal, I'd be selling bean oil rather than soybeans. Because if I'm wrong and that market explodes, there's still a competing product for bean oil, such as canola, rapeseed, cotton, palm, coconut, etc., corn oil. With soybeans, though, we take soybeans, crush it to make soy meal, and there isn't a lot of competing products for soy meal. There's fish meal, but now we don't use bone meal anymore here in the U.S. for animal feed. So soy meal becomes more valuable as an animal feed per se. So therefore, that's my explanation of why I'm more bearish if we get a signal to sell beans. If the weather does change, it's the bean oil complex that I want to be on the short side if the conditions are right. So once again, everyone, I hope you found the information helpful, and I'll be with you later in the week. Thank you.